two trades today, one on gold, one on Euro USD. One went exactly how it was supposed to. The other, well, that's just me being an idiot, but I'll explain both before our range is marked as usual. Now I'm sitting on the 5-minute chart. As you can see, price pushes above the range high and closes outside, so I'm watching, I'm interested. Next candle closes back inside. That's a short signal. I also noticed that the MACD is negative, which is exactly what I want to see before shorting. So everything checks out. Entry on the close, stop loss goes at the high of the breakout move. The take profit always stays at 2R. I set it and I leave it alone. So as we can see, gold drops, clean move straight into the target. This trade closed for a $2,000 winner. Clean, simple. Okay, so now we're looking at Euro USD. This one's on me. Before our range is marked as usual, the price dipped below the range low and closed under it. Then price closes back inside, so that signaled to me a long setup. The sequence was there, but when I checked the MACD, it was negative. Now a negative MACD on a long setup is usually a huge red flag. That's the rule. I've had that rule for a long time because I see what happens when you ignore it. But the candles looked strong coming back in big bodies, so I convinced myself I was seeing serious buyers stepping in. So I took the trade anyway. Price moved up for a bit, just enough to make me feel smart, then it rolled back over and stopped me out. That was a $700 losing trade and it was completely avoidable. At least I'm still positive on the day, but that's not the point. A loss you caused yourself hits different from a loss where you followed every rule and the market just didn't cooperate. One is part of trading and the other is a discipline problem. So here's the thing about rules. Rules don't care about your gut feeling. They don't care that the candles looked strong or that you thought you spotted something special in the market. The whole point of having rules is that you follow them, especially when your brain or when your intuition is telling you to do something else. When you override the rules when it comes to this thing called trading, I always say you're not trading your strategy anymore. You're trading a completely different strategy, one that is unproven and untested. When you override your rules, you are most likely trading with emotions and intuition. And occasionally it works, but that's the dangerous thing with trading. Sometimes you don't follow the rules and the market rewards you. So the market rewards bad behavior, and that's extremely dangerous. And as a matter of fact, it's one of the worst things that can happen, because then you think that you've got a gift for reading the market, but you don't. Nobody does. What profitable traders have is a system. And the system works only when you use it. So I'm not going to sit here and pretend that that was an acceptable trade just because I still ended today green, because it wasn't. The money I lost on Euro USD wasn't the market's fault. That was money I handed over voluntarily. So if you're watching this and you do the same thing, you see a setup and something's off about the setup, but you take the trade anyway, just know that it has a cost. The cost isn't always huge every day, but if you keep that habit up, it will cost you in the long run. It compounds. By the way, if you're looking to actually start trading, the platform I use is called Exness. It's straightforward and reliable, and you can get started with as little as $10. The link will be in the description below and in the pinned comment. Always remember this: the market doesn't punish bad luck, it punishes bad habits.